Hi, everybody. Welcome back to another episode of VCTV, which is the Venture Capital TV. My name is Sunny Mohanty. I'm the regional director of LaToken, and I am also the host of VCTV. So again, another week, another Monday, and we are here on VCTV, the VCTV family. And today we're going to talk about investments in startups from developing countries. Yet another exciting topic. And today I'm joined here by Gary, Kingsley, and Karthik. Wow, what a panel today! Thank you all. Thank you for joining me back on VCTV on this episode. And lot to talk, lot to discuss. It's about investments into startups in the developing nation, as we know the topic today. So yes. So before we jump into the topic, I would like to take a quick round of intro and background from all our speakers. I'm going to start with Gary. Hi, Gary. Welcome back. How was your weekend?
Hi. Well, fantastic. In fact, I went bike riding because I know you like it, Sonny. I know you like bike riding.
Yes, I do.
It's great to be here. My name is Gary Fowler. I'm a serial entrepreneur investor. I've done 17 companies, 2 unicorns, original management team of Click Software, which was sold to Salesforce a little over 2 years ago for $1.35 billion. And also in the original management team of Eva.ai and founder. Eva is an AI HR tech company that I co-founded 5 years ago with Dr. David Yang. I am the CEO, co-founder, and president of GSD Get Shit Done Venture Studios, a premier AI and quantum venture studios that curates companies from all over the world, in particular developing countries, to go global using Silicon Valley support. So great to be here.
Thank you, Gary. One thing I see Karthik, that little, he's sort of frozen. He's smiling and he's frozen, I guess.
But that's a perfect pose to be frozen, don't you think?
Yes. That's
he's got a happy camper look.
Well, while you were giving your introduction,
I thought he was laughing at me for a second. I was looking at him saying, man, he's really happy.
Now he's backstage.
Yes, sorry. I was just gone for a second and I'm back.
You had a perfect smile. Karthik, we thought you were smiling. You were so happy listening to me speak. I kept looking at you saying, man, I've never seen anybody that happy in my life. You really missed me. That's what I was thinking. Didn't you think the same thing, Sonny?
Yes. That's why, Gary, when you were talking, I couldn't really focus on you. I was looking at his frozen picture. I realized it was frozen after a while.
It was a perfect pose to be frozen.
Yeah, Karthik. You had that little mysterious smile. And I was like,
like you're
happy. Like that.
And I was frozen.
Okay, good. That's okay. Okay, good. Thank you so much for being back again, Karthik. And Kingsley was also not there after Gary, so I was the only one like me and Gary were left.
I'm sorry, I was not saying goodbye to my business partner, so good.
Oh, okay.
Yeah.
Okay, Karthik, now you're back. Before you freeze again, let's have a quick round of intro.
It's my 104th episode with all of you, and it only gets better every time. And I represent Middle East from Dubai. Represent a couple of family offices in the UK and a Saudi venture fund, and an angel investor and incubator myself. Have been investing in edutech, health tech, and space tech, and coming from a developing country. So a lot of insights on how startups and what challenges do they face in developing countries.
Perfect. Thank you, Karthik, for that intro. Next, I have Kingsley. Hi, Kingsley. Welcome back. How was your weekend in Tokyo?
Hi, sorry. Oh, weekend was good. Was very, very good. Went golfing with the wife. We had a good time, and it's Monday again, back to work. But it was a beautiful weekend. How was yours, sorry?
Was good. It was very good, actually. It was raining. I think you must. Some of you know it was raining really hard. On Saturday, I was visiting Marin, who is one of the speakers on VCTV as well. So I had a very good time, and Sunday was relaxing, cycling around. So yeah,
that's good. Beautiful day yesterday and today. It was rain yesterday, but it didn't rain. But back to business. My name is Kingsley Kobayashi. I'm a serial entrepreneur, investor, and I invest in finance, blockchain, and actually focusing on developing countries where the opportunities are just numerous. So looking forward to this discussion today, and thank you, Sonny, for having me.
Fantastic. Okay, great. Thank you again, Kingsley, Karthik, and Gary for being a part of VCTV today. So yeah, we're talking about developing nations as well. Like I was also born in India. So Karthik, so is Karthik, and obviously Kingsley is obviously lived in Africa. So let's talk about what kind of problems startups face in typically. What are the typical problems startups face in developing countries? And let's start with Karthik.
So, it's an oxymoron of sorts. Developing countries, while they create a lot of startups, even the challenges in terms of infrastructure, in terms of governance, in terms of VC funding, the risk appetite that the VCs have, the procedural bottlenecks, and more importantly, the talent pool with the level of maturity that you require are the initial challenges that a startup faces. More importantly, as you grow, the space of incubation where the startup needs to be incubated, which is where the acceleration in a startup comes in, is more often than not very limited, with far too many startups vying for the space, which is where the success ratio is little less than 0.5% in developing countries. But the base is so big that there are a lot of startups that come out. And more importantly, the level of innovation, the level of technology, and the level of infrastructure, more often than not, make some of these startups either non-competitive or make them a little too me too, which is why a lot of innovation is followed up in the region. And then comes the last leg of a startup, which is the market for a particular startup. More often than not, it's on a very latent stage of development, the market. And hence, startups have to wait that much more for them to understand and be a part of a mainstream ecosystem. So while we see a lot of startups in geographies like India, or for that matter, even Pakistan, Bangladesh, Brazil coming in, the route to market, the time to market is that much more longer.
Yeah, I think rightly said, Karthik. Starting and running a business is not a walk in the park. I mean, as we all know that. There are many challenges businesses face along the way, from growing revenue to managing cash flow and raising funds. And 8 out of 10 entrepreneurs, founders fail in the most favorable ecosystems, be it Silicon Valley or developing nations as well. So yeah, so how the entrepreneur, the founder,
the route to generate capital for a startup to survive, the route to generate capital, which is the VC money routing through legitimized banking channels or investment patterns itself, are a big challenge in developing nations. If I were to go back to 20 years of India, FDI investment or startup investment was a challenge when you couldn't find the way to bring in dollars and had to route it through either Cayman Island or had to route it through Singapore, which became that much more challenging. So right from finding out the source of funds to somebody taking a risk appetite, to being an infrastructural positivity, to having government support coming in, there is a challenge. But with evolution, developing nations are now becoming that much more faster, and the scale at the base of the pyramid makes them more competitive as they open or unlock value.
Right. Thank you, Karthik, for sharing those opening remarks. Next, I have Gary. Gary, you work with Africa, you work with India, you work with almost every other country sitting out of Silicon Valley. So what is your take? What have you seen, the kind of problems typically faced by startups?
Well, in Russia, I started the first accelerator. And so this is really the beginning. I started living in Russia back in the early 2000s when there really was an ecosystem and Russia was developing. And so we started it. And, Karthik's right. One of the challenges that finding the money to be able to support those startups is really hard because people don't understand it. So we started a startup academy. Then I had to start a venture academy. And all of a sudden, the opportunities start to grow. You have amazing scientific talent, but really it's like having a Ferrari in the garage. You got to be able to take it out. And so now in Africa, the same situation. It's there's 1.2 billion people. And we have companies we work with in Nigeria, Zambia, South Africa, Egypt, Uganda, Kenya. There's just a lot of opportunity, and intellectual capacity is evenly spread around the world, but opportunities aren't. And so coming into those are where you're going to find incredible unicorns, those kind of places. And people, as they're afraid to come in for all kinds of different reasons, they just don't understand, or they're physically afraid, whatever. That's where you find those are the places you find those opportunities. So it's getting the government to support is absolutely important. But from my standpoint, we didn't have that when we got started in Russia and that region. But what we did have is we had support from investors in places like Silicon Valley that understand that there are diamonds in the rough opportunities. So look for those areas, because you're not going to have the competition as much in terms of other VCs coming in, and you're going to be able to mine them early. And
Right.
those opportunities. We were just in Nigeria. We're going back to Nigeria. There's incredible opportunities there that are untapped.
Right. Great. Thank you for that insights, Gary. Real helpful to understand that region. Thank you so much, Kingsley. Kingsley also sitting in both parts.
Yeah, Sonny, thank you very much. I was born in Benin City in Nigeria, and I grew up and I was educated there, then moved to Japan. Asia, we have been for about 30 years, so I know both sides of the coins. I go to Nigeria every 4 or 5 times a year. So the opportunities in Africa is numerous.
Right.
But the obstacles are also numerous. Yes, in America or Europe and did it back here. It became very successful. We are at the time right now where African and other developing countries need to do the same. We need to copy what is being done in the developed world, because there's less opportunities in the developed world because it's already saturated with different kinds of startups. But in Africa or South America or Southeast Asia, they don't have these things yet. So the opportunities are good for startups. But the problem they face is commercial banks are still there. Commercial banks don't give loans to startups or don't help artisans to start. So that is where blockchain comes in. So when you look at the blockchain solutions for startups in Africa, it's doing very well. For example, you have Flutter Wave, who just raised the $170 million for its payment system. You have other healthcare innovations, other green tech, agriculture, and whatever is going up there that you can put your money into, despite the government not helping out. But they also have special loans for people or special incentive for people who are in agriculture, who are in other sectors. But what I see is that the media is not doing Africa a very good job. They tend to paint Africa as a dark zone, a zone where if you invest there, you will get back your money. But that's not true. You have to invest in the right people. You have to invest there with the community, not one person in particular. You have to include them in the investment, and then you'll be able to get your money back. And like I said, the opportunities are numerous right now. If you look at the Pampas company that is there, his revenue grew more than 20%, 30% during this COVID period. You know, Africa's population is going to grow under 10% in the next 20, 30 years. So the opportunities are there for you to put into. But yes, there are obstacles, but we overcome it.
Okay, great. I think great start to the show with the insights about what are the issues generally faced by startups. So I think I just want to know what kind of investments exist for startups in a developing nation. Do a SPAC deal happen in these countries as well, or they're like only probably angel that's happening in these countries, or VCs are very limited. So what kind of different investments do these startups receive, especially in the developing and emerging markets? Karthik?
So you'll have to define developing market very, very clearly, because a developing market can be a Saudi, a developing market can be a Brazil, it can be a Russia, it can be an India. Now, different developing markets are at different stages of evolution. But if you look at the evolution of a market like India, to give you a perspective, 20 years ago, there were only friends and family investments. VCs were not very comfortable investing on an idea. They wanted you to raise your seed, they wanted you to raise your angel, and they would come in at a Series A when your valuations are almost built. Family offices wanted to invest only in real economy and not on tech businesses, or not on new economy as we call it. But of late, over the last 10 years, with e-commerce 2.0, on fintech investments, on banking development, on healthcare development, investments have started coming in on even an idea basis. And VCs have spread themselves from being only a fund house into an entire incubator, which means they come in with the entire bells and whistles of creating an organization from an idea to a execution stage. And hence, the investments have grown. But what typically is a few $1 million ticket in the West or the developed nations is typically a 250 to 300,000 ticket in developing nations, not because of the fact of the risk, not surely because of a risk appetite, because of abundance of investment opportunities, the number of people who would want to come in. For example, I look at investments coming in from New Zealand, Australia, and in India, all the three geographies. I receive 12 proposals a month from New Zealand. I receive almost more than 600 proposals a month from India. That's the quantum of investments that you're looking at. Success ratios are different. Maturity of the investor, maturity of the startup owners, the ability or their ability to come with a consolidated plan, proposal, execution doc is far limited. And hence, VCs de-risk themselves by spreading themselves far, pick up sectors, focus on the sector, incubate 4 to 5 different businesses in one sector with a belief that 2 out of these 4 or 2 out of these 10 would be successful, and hence they would get their monies back. It takes 8 to 9 years for a geography to stabilize in this kind of an ecosystem. Once you have 3-4 success stories, after success of Flipkart, Myntra, or Udaan for that matter, coming in from the subcontinent, today we see multi-million deals going up to 500 million to 750 million also being struck in that part of the world, which is typically your E and F rounds. So the maturity of the market and the density of the VC or startups defines what kind of investments go into that. But for developing nations, primarily investments necessarily go into your technology space, into health space, a lot into edutech space, not too much into the space tech, not too much into quantum and nano, because developing nations, while they would create those, the market.
So, Karthik?
Yeah, I'm here.
Yeah. You froze.
Oh, I love freezing these days. It's very warm in Dubai. But so I was talking about the type of investment, Sony. It's about the demand, the latency of demand, and the maturity of the market, which is why India today produces a lot of edutech, a lot of fintech, a lot of banking, a lot of e-commerce, a lot of analytic businesses, but doesn't produce a lot of quantum and nanotech businesses because there's very little market for those businesses here.
Great. Thank you, Karthik. I think it's a very good point for startups because you know what, Karthik, I have few startups in these countries, and they sort of reach out to me. And because they say they do not have that needed help, and VCTV obviously a platform where they can connect with you. So I just wonder what happens within their own country, why they're not getting that much needed help. So it's a good eye opener for all of us here to understand the challenge.
Even the process is not very distilled, Sunny. For example, there are a lot of startups that have started coming to me from Pakistan after I started coming on VCTV, primarily with the belief that they see that somebody's out there who can help them.
Rock concert, doesn't it, Sonny?
Yes.
Can you hear him?
No. Again, another face, but this face doesn't look that happy.
Okay.
Yeah, it's bad.
Okay.
Karthik, are you here?
It's okay. Someone else just go ahead and talk.
I think Gary, you can go ahead, please.
Yes.
So, yeah.
So what was the question again, Sonny?
So we have seen SPAC in the US. We have seen a SPAC recently in Singapore. What about kind of investments exist in a Pakistan or India or Bangladesh, Africa or Russia? What kind of deals do we see? Do we see similar kind of deals happening in those countries, or it's different?
Yeah, I mean, the situation is, it's the same kind of thing. So, we're looking for companies that have interesting artificial intelligence or quantum computing, deep tech. So, those companies exist. It's a matter of going out and find them. That's where the opportunity is. So what we do on our side is really reach out. And I think that it's a matter of then getting the visibility. I mean, this is back to basics. You need to be marketed. If you're in Nigeria and you don't have a global audience, you need to be able to get that global audience. So, and of course, as you're right, you said about the digital transformation in VCTV, having an audience to be able to talk to, having investors to reach out to, having people that understand and really understand the value in that technology is really important. But that's everywhere, by the way. I mean, we see that everywhere. It's a matter of connecting the dots, and the basics need to apply. So when we look at places like Nigeria, the same basics. Do they have a good team? Do they have product market fit? Do they truly dominate their space regionally? Are they ready to go global? Those kind of things are really important for our perspective. The other thing is, did they do customer development? Many times, no matter where they're from, they haven't done their customer development. They don't really know if their product's valid, if people want to buy it. So we look at revenue. Do they have a substantial amount of revenue, or do they have the potential to be able to grow the revenue? So those are the simple things. But I can tell you directly, working globally, that it's a matter of really reaching out and finding those startups. They exist. I was surprised. I got to tell you, and I'm sure Kingsley will verify it. When we went down to Nigeria recently, we were I had heard, because I know about AI Saturdays and some of the things happening. And of course, Nathaniel, who's on VCTV, but really to see it and to meet with all those startups and the amount of, there's 206 million people just in Nigeria. There's a huge population. And it's really, once you need to ignite in a positive way the ecosystem to get people excited. You got to create these entrepreneurs clubs. You got to create some of the infrastructure to make them highly interested in, and also realize that you can go global, right? That you can become a global player in the market, like Flutterwave, right? So, and you look, companies like Google are opening up accelerators in Africa now. They're actually, some of the big players understand the opportunities. Look at Zuckerberg. Mark Zuckerberg was in there not too long ago. So they're getting the attention, but now the investors need to really start to mine those opportunities.
So that's a good news, I think, for all those startups and talents in those countries. If Google is having incubators, it's an awesome thing, But does everybody gets an access to those incubators? Is it like, I don't know, is it like expensive to get? Or is it like there's a qualification, the selection process, a qualification process?
Well, the thing is, we do it ourselves. So we have a number. Actually, half our classes right now are African groups, and we started GSD Labs particularly because we wanted to curate some of those companies. Here's the other thing: there are a lot of cultural differences, and when you go global, it's an entirely different experience. You really need to understand what those investors are looking for. Does your pitch make sense? And we have people like groups like Andreessen Horowitz are part of GSD Labs. In terms of mentors. So they're coming in, they're listening to the pitches, etc. So when you need to get those top tier folks, and they are coming in, it's like having a Ferrari in the garage. If you keep your Ferrari in the garage, nobody knows about it. You got to get it on the track. You got to take it out. If you want to sell it, you take it to an auction. You got to open it up. And so we look at it as there's a lot of Ferraris in the garage. What we need to do, our job is to go in and find them and help them get them out. And everybody wins. Click Software, right? Many years ago, when we brought Click Software from Israel, at the time, Israel did not have a developed ecosystem, and came from Haifa, Israel to Campbell, California. And we renamed the company Click Software from IET, and the rest is history. But you got to have some way to get that kind of visibility if you want to become a unicorn, if you really truly want to dominate the space. So the opportunities today, the digital transformation's upon us, but it's a matter of really going out and understanding. Many times those startups don't believe that they can go global, right? They're like, oh, we're going to be a regional player, and they become like a lifestyle business. But the key is get out there, do it sooner than later, move as fast as you can, do it the right way. And again, we use Silicon Valley as a port because there's a lot of money there. If I want to talk to Germans, I go there. Austrians, I go there. Chinese, Japanese, I mean, you name it, because it's a port. And what does it mean? It means your valuations go up. If you're in a place like Nigeria, your valuations, as Karthik just said, an A round is a lot less than it would be in a place like Silicon Valley.
Right. Great points there, Gary. Really useful points for the startups in the developing nation, to be honest. Thank you so much. Karthik, do you like to continue with where you stopped before we lost you?
Yeah, so what I would pick up on what Gary was saying is when the developing nations started taking momentum and driving the startup ecosystem, a lot of these global venture funds created incubating labs. So today Blackstone has an incubating lab which curates on an average almost 40 to 50 startups every month, holds them for a 3-month period, releases them into the business, tests them and exits them in a period as short as 6 to 7 months to understand where is the dollar going wasted and where is the dollar going to multiply. In the same way, Google conducts these workshops, Google conducts these incubations, and now venture funds and offices have started coming with country-specific funds. So I think RUNET has an India-specific fund, Helion and Lightspeed have India-specific fund. I see a lot of fund coming in from Sohn Capital. I see a lot of fund capital from even, I think Sony's investment arm also has a lot of money coming for India-specific. So identifying those startups and the success of a startup necessarily depends on the investors, but a proper handholding is what the venture funds and curators are doing to make sure that the idea from an incubation stage to an execution stage is filtered, distilled, and purified to a level where the business commercials or reality strikes in, which is where businesses like Paytm or businesses like even, for that matter, even Ola or the Yo, which is the Oyo hotels, have become successful. Last 10 years, 15 years, the number of unicorns that have come out of a geography or developing nation like India has also created and built a generation of startup entrepreneurs who are that much more ready. It's an evolution in this entire business, and which is where today average investment in startups in the technology space in India is probably the highest in the Southeast and the Far East geographies per capita investment. So that's a level of innovation we see, but also what comes in together along with this is the way startups are evaluated. You don't necessarily evaluate
Okay. Kingsley, over to you, please.
Right. Okay. Let me just put it very simply. I think the way people look at developing countries now is not right. I was personally fortunate to be locked down in Nigeria last year for 4 or 5 months. And looking at one of the factors that drive startup is the population. You may have a good idea and you have 6 million people. You will have 10% of 6 million people buy into it. It's very small. But in a country like Nigeria, where you have 246 million people, if 10% of the people is buying what you are selling, you already have more than 6 million. And when you look at the whole of Africa continent, with growing population as compared to the aging population of Japan and other developed countries, it shows me that Japan, when I came to Japan, it's like Nigeria now. They were developing then 30 years ago. They were developing. So when you look at the pictures in Nigeria right now, you see all the pictures that will make the country to succeed. You have a young, educated population. I'm not saying that because I'm Nigerian, because I've been from there for a very long time, but you have a young, educated population. You have people with ideas. What they don't have is the startup money. They have the ideas, they have the IT intelligence, they have the education needed for it, but they don't have the funding. And those who have been able to break out of that system have been able to make it. Whether it's Slack, whether it's Flutter Wave, whether it's healthcare. Personally, I'm investing into natural medicine there. And that is something the World Health Organization is looking into. Why is Africa not suffering from COVID-19 the way it should be suffering from the pandemic? Because they are used to natural herbs. They are used to natural medicine. They already use malaria has been there for a very long time. So they are used to being able to boost their immunity. So these are areas of healthcare innovations that one can look into. One can look into the unbanked, the payment system. This is another big area that can be looked into. You can look into agriculture, which is another big area. But what is their basic problem? Their basic problem is they don't have the funding. Now, if you don't live there, if you don't stay there, you will not be able to identify the companies or the people that will make it big out there. But if you have somebody on ground, you can marry one or two projects together and you will have a unicorn in no time. In no time, you will have unicorns coming out of there that will make you think twice and say, hey, I need to go to Africa. I need to start making money there. I mean, the opportunity there is just is numerous, and it will be sad that people don't go there to make that happen. Like Gary said, I spoke to Derek. Derek was there last 2 months or so. He saw the opportunity in Nigeria and Africa as a whole, and I'm also looking to actually going back there and doing one or two things because right now the developer countries is harder to make money. It is easier to start something new and watch it grow. And I believe Nigeria and the whole of Africa is the next place to be.
Right, right. Yes, absolutely. That's why Gary was there with his team. So, so we have lost Karthik finally. He can't get in because of his telecom network, which is the DEU. I think they just have blocked him, I guess. Sorry. They blocked stream, yeah, not him. My apologies.
No, I mean that happens when you're in Dubai. Your WhatsApp doesn't even work there, so it's difficult.
Yeah, right. So I just have a very important question, and obviously this question is coming from our founder as well himself. So why registering? Like he is obviously operating in a small country now, which is considered developing, but why registering out of his own country in another country might help attract investments because he's planning to move into Singapore, and eventually Singapore would be the head office. That's basically his question is why registering a startup in another country, like if you are in Asia, if you're registering in Singapore, why would that help, and how would that help to attract investment? Gary?
Yeah, I mean the situation. So it's just so look at it. It's a rule of law. It's protecting your IP. So we register the companies in Delaware, create an office in Silicon Valley, because people want protection. They want to make sure that if there's IP, that if there's some kind of issue, there's a body of law, corporate law, to be able to support it. And if not, what do you really own? So that's why it's done. And you just want to make sure that whatever asset you have, that it's protected. And it's just a matter of course. The VCs that we know will not invest. We deal with Silicon Valley. Well, we deal with VCs all over the world, but they don't want to invest unless they know that they're protected. And so it's simple. I mean, you got to understand what that is a company formed correctly. Are they transparent? Is the entity an investable entity? Does it conform to international law? Those kind of things. You just need to understand when they're doing their due diligence, they'll dive into it and they'll make a requirement for the company to be registered in a particular location. Yes. Or they won't invest. And it's a lot easier to open the story when you're talking to somebody. We say they now become a Silicon Valley based company. It's a whole lot easier than saying, you're in some city that's not on the map. You got an incredible technology, but you got one more hurdle to explain.
Absolutely. I think you've just answered it so nicely. Thank you.
I agree with Gary very much there. It's all about regulation. You want to be in a regulated environment. For example, you don't want to invest in an environment where the government is saying, I'm going to ban crypto. I'm going to ban that. So in the regulated environment, a place that have regulations to be able to push your business forward, to be able to entice your investors to put money into you. If you are in Tokyo, if you're in Singapore, they know that it's regulated. It's more viable than saying I'm in this so village in that country. So it's a question of perception. How do we perceive? People want to invest in already successful people. Nobody want to invest in people who are just coming up. It's very simple. It's human nature. You want to put water in a cup that's already full, not the one that has no water at all. It's human nature, right? So having your company registered in London, in Silicon Valley, in Singapore, in Japan, is more viable than having it registered in a different country? Or you may have to invest the money in those countries, but the investors don't want to know that.
Absolutely. I think, yes, these are very, very key points to register your entity, your company outside of your own country if it is if you work in a developing nation. I think both Kingsley and Gary have explained it so nicely. So I have got a question, another question coming from another startup, but it's a general question that applies to all the startups, but also can also apply to startups who are basically not very much they don't want to take too much of risk in terms of attracting investments or giving away more equity in their businesses, because these small these entrepreneurs in these countries are very not very open to taking risks, right? Like probably in a Silicon Valley. I think it works both ways as well. So, what are the some valuable lessons? Sorry, what's some advice for startups in these regions, specifically in these regions, to avoid common mistakes? A, when they're seeking money. B, when they're seeking some sort of partnerships. So yeah. So what advice specifically for these startups would you have to avoid common mistakes?
Yeah,
Yeah. Oh, Kingsley, go ahead.
yeah. The part is you have to back up your plan with written notes, with a concrete business plan. What people don't do is they just say, okay, can I have $1 million? Can I have $500,000? You've not even told me what you want to do with the money.
Yeah.
Your first approach is to tell me your business plan.
Yeah.
Tell me what you are trying to achieve. Why is it that you want that will be able to achieve it? How do you impact on the community that you're trying to help? And how do you what's your next 5 year projection to exit globally or locally? If you don't have this, then telling me you want money is just like, hello, wake up. What's your plan? So they have to have a very concrete plan to be able, because first of all, the world already have a negative notion about those countries. They already
Yeah.
have, they've already been brainwashed to believe that if I put my money there, I'm going to lose the money. So you have to go extra mile to explain to the investors how they can get their money back. It's not just about your business plan. What is your exit strategy? Once the investors understand that, they will put their money into your business. But if you're not able to explain that, I'm sorry, you have a problem because of the continent you are from, because of probably the color of your skin, because of you are not being able to explain yourself properly. So you have to do a lot of homework to be able to get it.
So, Kingsley, what's the difference between investing into a startup in Tokyo and Africa, for instance? And what differences? What are the glaring differences you've come across in your as an investor? What differences have you seen? I mean, in terms of talent, in terms of tech appetite. So, if you can take us through this journey of yours with an
Yeah,
example.
investing in Tokyo is very simple. You go online, you see everything, right? You go online, you have the statistics. You see the date the company was registered. You see you see the track record of the company. You go to the tax office, you see whether he's paid tax or not. You go somewhere else, you find all the information you can find online. But if you invest in Africa, you don't have any information online. You have to do everything in person. You have to have people on ground to find out, is this company real? How long has this company been running? Is this it was not only in Africa, to be honest. There was a time I was going to supply D1 then to a country in Europe from Russia, and before it was social degenerate. Before I paid the money, I said, okay, let me go and check out the office. They sent me an office address. I flew all the way to Russia only to find out that the address is a post office address. It's
Is
not even
what?
an address. It was a post office.
Oh, really?
Yeah, it was a post office. And I'm like, I'm here. I said, where are you? I'm in front of of your office. It's a post office. And he just cut off the phone. So those kind of problems happen in developing countries. So you have to be on ground to actually make sure that company exists. You have to be on ground to check the staffs who are working on the project. You have to be on ground to see how far they have gone. Whereas in developing countries, you don't need to do that. at the top of your computer, all the information are out. You have all the information where he was born, what he's doing, what school he went to. You don't have that information in the developing countries. So you have to actually do extra work to make sure that it is genuine. You are not being played. So it is very, very different. But once you are able to find a good one, and let's say it's agreed, you have the CFO, the certificate of occupancy and things like that. You see the company address, you see where they are, you see that they are actually working, because if you are there for 1 month, you'll find the truth. So you have to do the hard work and then pick up 1 or 2 startups that you want to invest in. And believe me, you will not regret it.
That was very good story sharing. Post office. Thank you.
It happened.
Wow. I'm sure Gary must have such stories as well to share. Gary, first of all, common mistakes that startup founders from a small country are, trying to get some funding or grow or scale outside should avoid, and some similar stories where you try to, sort of fund or invest or be a part of a project in a emerging market, and kind of hurdles that you faced.
Yeah, sure. I haven't done a post office hurdle, but I've had some other ones. The situation, it's a matter of getting the word out, right? And a lot of times they're technical founders. They don't have marketing, sales, business development expertise. They're from a different culture. They're not multicultural. And so, that's really important when you're going to go out. And then, of course, with the digital transformation, credibility and trust are important, because, as Kingsley said, you don't want to give money to somebody that you don't know, to make sure there's not some type of a scam or an issue. So it's, what we do a lot of times, we get embedded inside of the ecosystems, and you can start to really vet it out, because you'll find out who's real and who's not. We do create the offices in Silicon Valley, so that, we're bringing, one is we check to make sure they do have their R&D lab set up in the right kind of place. They're really do have the customers. We do check to make sure, we'll interview customers to make sure that they're doing what they say they're doing. I mean, it's a matter of doing due diligence. Every VC that's out there goes through the same process. But you can really tell when you have a couple of conversations with them whether or not they're real and the kind of technology. And we're dealing in artificial intelligence. It's really not so easy to fool on the AI side, especially when you start looking at their models. So it's not that easy. And in terms of, companies, I had one time a developer of an incredible battery project, and he was a mad scientist. Just wild. He's just a wild guy, very, very smart. But he said, it's a $40 billion industry. My battery is 6 times longer than lithium ion. So I'll have 90% of that industry. That means my company's worth $36 billion.
Wow.
And I tried to tell him, I got him $10 million from an investor in Silicon Valley, and it was not easy, because I had to put my own credibility on the line.
Yeah.
And so that was door number one. Door number two is, many times those founders won't share. You should have 15 to 20% of your company for your employees to make sure they stay, because once this company starts growing, you want to make sure that you're fair and you're distributing some of the wealth out. It's just it's just the way we do it in the Valley. And a lot of times those founders don't do it. In fact, this particular founder didn't do it. It was 100% his company. So try to get that sold. One is irrational exuberance. You think your company's worth too much. And the other thing is, you don't want to share. And then he said, well, if he's only putting $10 million in, he gets a fraction of a $36 billion company. And I tried to tell him, it's like bullshit. You know what I mean? It's like, dude, man, come on. You're a scientist making, $1,000 a month, not even $1,000 a month. And this guy's going to change your life. So, some of the times you have that. What I tell the founders out there, make sure you have mixed teams. You got a marketing person, you got somebody that's operation, somebody that's technical. Make sure you have a balanced team. Keep an open mind. Many times they don't have open minds. if you really want to go global and raise a kind of money, a flutter waves raised, you need to have a different kind of mentality. Have that global mentality. And the other thing is, the Germans have a phrase, Gestalt, the sum of the parts equal the whole. We all need to work together. Doing a company, building a unicorn is not about one person. It's about an entire group. It's a village coming together to be able to build something important. We all need to come together to be able to do it. Marketing is really important. So startups, understand, publish a lot of articles, get involved, do videos, because as soon as you mention your name to that company, they're going to check out to see who you are.
Right, right. Great example, Gary. Thank you so much for sharing those hurdles as well. It's very important for entrepreneurs in this countries to understand that it's not like you give me these millions and you don't get it and you get upset. There is a process to it, right? The fundraising process
Well, I mean,
itself.
it's money coming out of your pocket. When I invest money, it's coming out of your pocket. I don't want to invest in something that's not real. It's got
Yeah.
to, what is it? What are you doing? And one of the litmus tests for us is, do they have revenue? Have they gotten to the point that they have revenue? Can they manage their business? And if they have revenue, then you're pretty sure that, or 80%, that they've got product market fit, at least in that region, and you can do something on a global basis.
Absolutely. Great points there from both from Gary and Kingsley. I've got another question. So, if somebody approaches you from this country, like entrepreneur from these regions, and ask you to be on the board of directors, so what is the role? So does the board of director, somebody who's influential and is known in the fund in the investor community, having a board of director, is that going to help secure funding? I've got a question.
Yeah, I mean, I'll step into that. So there's two pieces. I wouldn't say the board of directors, but the board of advisors. Why? Think about it. We call it the principle. Keep it simple, stupid. If you've got board of advisors that are well known, remember it's about business as a contact sport. For instance, Rick Orloff is on our board. Rick Orloff is the former chief security officer at Apple and eBay. Security and privacy come up. It doesn't matter what company, they're going to come up as a question. The second situation, a guy like a Bill Reichert. Bill Reichert is Guy Kawasaki's partner. He's with Pegasus. They invested in companies like Airbnb, Uber. I mean, you name it, literally. So having somebody he's got a Stanford MBA, undergraduate degree, Harvard, somebody that's well known in the investment community. Why? Because they're friends. They can open up doors for you. The third person that I would get, somebody that's hot, somebody that's got name brand recognition, that can really help you understand that you understand how to grow a company. So I would say the board of advisors, not the board of directors. The board of directors, when you're a later stage company, sure, it's important, and it's important that those board members are actively involved in the company, helping the company grow and get credibility. For instance, Don Swan, the former chief operating officer of Walmart, is one of the guys that I put on a board of advisors. Why? Because Walmart, he was at the beginning when Walmart was really growing, and had been with Walmart over 40 years. So he knows a lot about retail, and he knows, he worked in China, Russia. He's worked all over Brazil. So he knows how that works, and he has the contacts. Remember, it's about contacts and trust. It's a lot easier if you have somebody opens a door that's a friend than if you try to do it yourself.
Absolutely. So yes, so there you go. You're listening. You just tuned in. Gary just said it. Yeah. So Kingsley, your insights as well. Thanks, Gary.
I agree with Gary. You need a versatile board of advisors, very versatile one. People that have that can open doors for you. Sonny, you did ask me for Japanese projects who can pitch in LaToken, right? One reason they cannot do that. One reason they cannot do that is they don't have a versatile board of advisors. You see, if you want to grow in any project or in any sector, you have to have people from different regions, people from different educational background, But when you look at most Japanese projects, they are all Japanese, right?
Ah,
So
yeah.
all the board of directors are Japanese, all the advisors are Japanese. So it is not global. So that way, how will they be able to pitch to you about a project in Japanese when they don't understand English, right? So you need a global board of directors to be able to make a company global. So you have people from different parts of the world. You have people from different ethnic groups. You have women, you have men, you have everybody in the group, which means everybody will be able to contribute from their own perspective, right? You have people that can open doors for you, like, okay, you want to do a blockchain business. You have Brock PS, you have DNA, you have this and that there. That will open doors for you. But if you just have people off from my village or Gary's village try to do a project, there is no way it's going to move forward because you don't have outside influence. So you need that outside influence or that face to open the doors for you in anything you do in life. It's not just on projects, it's anything you do in life. If you want to become successful, you need the right partner in life. You need the right wife, you need the right husband, you need the right business partner, you need the right people, the right contact that you can work together to pull you up there.
Yeah. Nicely explained as well. Thank you, Kingsley. Thank you. Nicely explained. Nice, husband, wife as well. Sure. Let's take some closing thoughts. I think I had a very interesting start to my week with this topic. So let's take some closing thoughts and remarks from each of you before we wrap up the show. And Kingsley, over to you. What's your closing thoughts?
Well, I think we should start having a different perception about developing countries.
Right.
We still have a very negative ideology of what Africa look like, of what South America look like. There are some good things happening right there. There are some good innovations coming out from there, and we have to look at those good innovations and embrace it. We all need to fit together. A tree does not make a forest. The fact that here is already developed and the other place is underdeveloped, we can all help each other, and let's look to helping those African countries or those South American countries to become a better place for them to live. Secondly, I want to thank you, Sonny, for always having me here. Gary, it's good to be with you. Sonny, I would like to tell you that myself and my wife are coming out with a book very soon.
Yeah.
Hopefully, yeah, we're coming out with a book very soon. By next week, it should be ready, and I would let you know about it.
Oh,
So you can,
congratulations in advance.
yeah,
Yeah.
I do. Me and my wife, we do everything together. So there's a book coming out for people who want to invest, for people who want to learn how to become something from nothing. I did that, and I believe everybody has the same opportunity to do that, and my wife believed that too. So we're gonna make it a better place for everybody. And like always, you can reach me. You can reach me on Kingsley at KingsleyKobayashi.com or Facebook, Instagram, Twitter. I'm there.
Thank you. Wow, that's a great news. Great piece of news coming from Kingsley. I'm gonna
Thank
see
you.
the book soon. Thank you.
I'll send one. Yeah.
Thank you, Gary. Over to you with your closing thoughts.
Yeah, I mean, this over the last over a year now, the digital transformation has really accelerated. So companies from all over the world have had more of an opportunity to be able to reach people than they ever had before because of things like VCTV, opportunities, vehicles to be able to get the word out. So this is a great time to be able to do it. What you need to do is you need to make sure, as I said, to establish an online presence so people know who you are and they understand what kind of things that you can do. So videos, articles, whatever you can do, write and make yourself visible. Become an industry leader. This is a great time. AI is the new electricity. It's like the beginning of the 20th century. So startups out there, understand there's a lot of data around us, and the companies that can make sense of that data and turn it into meaningful action are going to be the ones that really bubble to the top, no matter if that's a supply chain. We've talked about that a few times. Sunny health tech, really across the board. So, bless you.
Bless you.
So AI is the new electricity. Startups look at that, understand, realize your dream, visualize, stay positive. Investors do not want to say negative attitudes. Don't say words like I hope or maybe. You got to be sure in yourself that you're going to be able to do it and get the job done. It is about creating a village and an opportunity for each of you. And marketing, sales, and business development are critically important to that. You can reach me, Gary Fowler, on LinkedIn. You can reach me on Twitter. I'd love to hear from you. Stay positive, stay focused, and stay safe.
Awesome. Thank you, Gary. Thank you, Kingsley. And thank you all the viewers for watching VCTV. I'll be back again tomorrow on another topic, another set of speakers as well. Till then, be happy. As Gary rightly says, be happy always. Stay connected. And I'll see you again. And take care, all of you. Thank you. Bye.
Bye-bye.
Stay safe.